Hey friends, it's Mark Piard with Piard Home Experts. We just got the August jobs report, and while it's not great news for the economy overall, there's actually a bit of a silver lining, especially if you're in the market to buy, sell, or refinance a home. In the next few minutes, I'll break down what's happening with jobs, inflation, and mortgage rates, and how all of this could impact your real estate decisions over the next few months. So let's get to it. The U.S. economy added just 22,000 jobs in August, way below expectations. Economists were forecasting something closer to 75,000. So this is a huge miss. Unemployment also ticked up, rising to 4.3%, the highest since 2021. And the trend is what's even more concerning. June was revised down to a net loss of 13,000 jobs, meaning we actually went backward that month. Here's a few more breakdowns. Manufacturing lost 12,000 jobs, making it the fourth straight month of losses in that sector. Wholesale trade was also down by 12,000. Federal government payrolls fell by 15,000. On the other hand, healthcare added about 31,000 jobs and social assistance added 16,000. So not every sector was hit. But across the board, the report signals that momentum is fading. And as one economist put it, the job market is stalling short of the runway. So what does all this mean for mortgage rates? Well, historically, a weaker job market gives the Federal Reserve room to start cutting interest rates. And the markets are definitely expecting that. After this report, futures traders priced in a 100% chance of the Fed rate cut at their September 17th meeting. Some are even betting on a half-point cut. But, and this is important, inflation is still running above target, especially in the service sector. Here's the breakdown. The Fed target is 2%. July inflation came in around 2.7%. And the service sector inflation, things like healthcare, hospitality, and education, is still sitting at 3.8%. That kind of sticky inflation is why the Fed may act cautiously, even in the face of softening job numbers. Still, and here's the key. Mortgage rates don't wait for the Fed. They follow the bond market, and the bond market has already reacted. As of this week, the 30-year fixed mortgage rates dropped to about 6.29%, the lowest we've seen in nearly a year. Even FHA loans have dipped back under 6%. This was the biggest one-day drop in rates in over 12 months, and it happened entirely because the market expectations, not because the Fed has done anything yet. So if you're waiting for the Fed to officially announce a cut before making a move, you may already be late to the opportunity. If you're a buyer, this is a real opening. Lower rates mean lower monthly payments, plain and simple. That gives you more purchasing power, and it also means that sellers who've been holding out for top dollar are starting to negotiate. Inventory is growing in some markets, and buyers now have a bit more leverage. I get the job market headlines might feel scary, but if you have stable employment and you've been financially ready, this could be a great time for you to make your move, especially before rates rise again or competition picks up. Now, if you bought a home over the past year or two and locked in a mortgage above 7%, you may want to start thinking about refinancing. You don't need to wait for the Fed. Rates have already dropped. Even a half-point reduction could save you hundreds per month, or let you shorten your loan term with a little change in your payment. Sellers, this might be your window too. Falling rates tend to bring more buyers back into the market. So if you're thinking about listing or trading up to a new home, the timing might actually work in your favor. But here's the thing, pricing matters. This isn't 2021. Homes that are priced right are still selling, but buyers have more options now and are less likely to overbid. If you're both selling and buying, lower rates on your next mortgage can offset any flexibility you offer on your sale. To wrap it all up, the job market is cooling, manufacturing is shrinking, inflation is sticky, especially in services, but mortgage rates are already falling. If you're thinking of buying, selling, or refinancing, this is your time to make a plan, not sit on the sidelines. And if you're unsure what this means for your unique situation, let's talk. Message me, book a call, or drop a comment below. No pressure, just honest advice and smart strategy.